There is a huge debate going on right now in Denver. Is it a buyer's market or is it a seller's market? There are headlines that talk about it being a buyer's market right now. And yet, the key indicator, the months of inventory that the National Association of Realtors claims to be the definition of a buyer's or seller's market, doesn't really show that we're in a buyer's market right now. The other thing that's interesting about this is that even the experts are debating. I sit on the Denver Metro Association of Realtors Market Trends Committee, and we had a debate amongst ourselves. And I want to share with you some of the key metrics that I look at when making a decision on what type of market it is and how I use this information to actually keep my clients or people are just kind of curious. Like you might just be curious about what type of market it is right now and how your asset is doing. So let's get right into it. I want to share some of the headlines and we won't get too far into it because all you have to do is Google, is Denver a buyer's market or a seller's market? Reddit states that the Denver housing market is taking a sharp turn towards buyers. The Gazette said that Denver housing inventory hits a 10-year high. ABC is mentioning that the federal interest rate cuts are helping to soften the Denver housing market. There's all kinds of headlines that are discussing this topic right now. But the interesting part is that most of them are actually citing inventory levels as the indicator for this shift. And I'll be honest, that's actually true. We are seeing record inventory levels. But I want to back up for a second because what actually defines by the National Association of Realtors standards a buyer's market is what a metric called months of inventory. Months of inventory is the amount of time it would take for all of the current listings that we have available for sale to be absorbed into the market for buyers to come and buy them, right? So usually we think of a seller's market being anywhere from 1 or 0 to 3 months, right? So homes that are selling relatively quickly. Buyer's market tends to be after 6 months, and kind of a balanced market is in that 3 to 6 month range. And basically, what that means is in with 1 month supply of inventory, you have one home for every buyer in the market. However, in a buyer's market, 6 months or more supply of inventory, that would be, let's say, six homes available for every buyer in the market, which sounds delightful, doesn't that? We like the idea of having choice. I mean, we're Americans after all. However, there is a psychology term called choice overload. And this basically says that choice is not actually always good for us. Sometimes it causes confusion and it can make it hard to make a decision. For example, have you ever just been into the grocery store and tried to pick out like some jelly? Or how about the entire aisle of toilet paper, right? You're just like, oh my gosh, can there just be 1 or 2 options, please? Choice makes it good for you as a buyer, and also it makes it a little bit more challenging. So let's go into what is actually happening with inventory. We do actually have record levels of inventory right now. Since 2013, we have not had this many homes listed for sale. We have 13,000 active listings. But just so you know, that's not actually new listings. Let me show you this graph. Hold, please. This graph is actually going to show you what I mean and why I'm saying that. There we go. Sorry about that. Okay, this is the one that I want. Okay, so let's just look at new listings, right? So this is, if you can see it for the past, 15 years, these are new listings. Now, do we have a huge influx of new listings? No, not really. It's relatively average. And when you look at pending listings, they're way down. Pending being like buyer demand, right? So active listings, now this is the metric that the headlines are latching onto, are way up. Look how high that is, right? We haven't seen those levels since, there we go, 2013, right? So it's more about buyer demand that's the issue, right? Our pending listings are way down than it is about having all kinds of people listing their homes for sale. So why? That's always the question, right? Why are we having record inventory levels right now? Is there less demand? That's actually what I think is going on. In September 2024, we had 3,644 homes sold. Even at the peak in May of 2024, we only saw 4,835 homes sold, which, by the way, that's lower than any year, any peak of any year since 2012. So, why do we have such little demand for people to buy homes right now? The question is it changes in population or is it really due to affordability or interest rates? Let's talk about population for a second because I've seen that. And that was actually one of the things we debated in our market trends committee meeting. Let's talk just a little bit about what population looks like. So, when they track population gains, they're talking about natural increases like births, deaths. Um, we're also talking about the net migration, people flowing into the state, people flowing out of the state, and also immigration. It's interesting, though, that Denver County specifically is actually seeing a net negative or slightly flat migration. However, Denver Metro as a whole is slightly up. And the headlines are definitely latching on to a slowing, I'm sorry, the headlines are latching on to declining growth, right? So the population is still growing, it's just growing at a slower pace. But the population in Denver Metro is not decreasing, it's still increasing. Now, granted, it's only estimated to increase by about 1% in 2024, and it was pretty flat, 0.26% in 2023. So that's not a lot. But what is really happening is that a lot of people are moving to the suburbs, right? So we don't have work from home quite as much anymore. And counties like Douglas and Broomfield are seeing big gains in population. People are just moving away from the city. So if it's not about population declining, then what could it be about, right? Where is our buyer demand shrinking? What is actually happening? And why do we have this excess inventory? I personally think it's that we have such low buyer demand that it hasn't eaten up all of the inventory that we have for sale. And of course, the reason for that is that Denver is expensive. It's actually the 26% more expensive than the all of the national average. And we know this by the Housing Affordability Index. So let me share that part with you too, because I think this is an interesting graph to look at. And as I get better at doing this, I will be able to share more quickly. There we go. Okay, so this is the Affordability Index for Denver. And I think this is an interesting one because basically it's been declining for years now. And just so you know, the Housing Affordability Index, it's kind of a complicated metric. But what it shows is whether the average family income is sufficient to buy a median priced home in that city. So the bigger the number, the more affordable the area is, and the smaller the number, the less affordable. And as you can kind of see, Denver has been declining since like 2021. Now, what I really like about this graph here, and I'll just zoom it in so you can see better, is that we have been up in August 2024 and September 2024. You can see all these negatives, right? So that's fantastic that we are getting more affordable. And that's definitely due to a little softening in interest rates. Interest rates are a huge factor for people. For every 1% that the interest rates change, let's say it drops by 1%, 5 million more people nationally can afford a similar property. I mean, interest rates have a huge impact. I'm sure that you know, because if you're one of those people who's sitting and saying, I wonder if I want to move, you're probably thinking, oh, but I have, a 3% interest rate, which makes it really challenging to want to make a move. So affordability, I think, is really the issue. And that's what's causing us to have less buyer demand. Does that mean that we're turning towards a buyer's market? Well, maybe. Buyers are definitely hesitant and they have expectations on the perfect home and getting a fantastic deal. And I think that we have to be really careful as experts in the industry if we claim that it's a buyer's market on what that means. What does a deal actually look like, right? Many sellers are wanting to sell their home, but they can't afford or they don't want to take a huge loss from what they considered to be their equity, even though it's still unrealized, right? And so there becomes this dance, this tug of war between the buyers and the sellers. The buyer wants a great deal, and the seller says, I'm not going to sell my house for that little. That doesn't make sense. And that's where the negotiation piece happens, and why it's helpful, of course, to have a realtor who's really good at negotiating for you and communicating those things. Sellers are maybe sitting on the market for longer, but they're slower to drop their prices and they're prolonging their days on the market. But to get an offer, sellers do actually have to either price right or low from the start or make significant price drops. Prices are a little bit sticky right now. Sellers are firm, close to list price ratios. I'll get to that in just a moment. Are very close to the original asking price, and sellers are having to offer some seller concessions to help buy down the interest rate. Price drops can help, but sometimes it's just being patient with this understanding that we have such lower demand due to affordability issues that you really, as a seller, just need to wait for the right buyer. And as a buyer, it's coming in and saying, how much do I want this home? Can I kind of come up to the level that the seller is saying, this is my bottom line, and here's what I am willing to sell for. I can't sell for any less than that. And then you have to decide, is that a deal for you, right? Does that make it okay? Let's talk just a little bit more about the actual data. So days on market for September, median is 25 and 41 for average. So that doesn't seem incredibly long, right? I think our average for the last 10 years has been somewhere between 10 and 30 days, depending on the month of the year. So really, it seems like a very normal market right now as far as how long things are taking to sell. Now, that's not true about all properties. There are differences in type of property and location, but I'll get to that in a little bit. The month supply of inventory in Denver, remember I said 1 to 3 months is a seller's market according to National Association of Realtors. 3 to 6 is balance, and anywhere above 6 is considered a buyer's market. So check it out. For September, we have 3.4 months of inventory. So that kind of indicates a trend toward a balanced market as opposed to a buyer's market. Now, there's big differences in the type of property. A single family, like just having some land and your home, Those are at 3.1 month supply of inventory. So there's three options for every buyer in the market. And attached, it's closer to 4.1, like condos, townhomes, big differences in the condo townhome market versus the single family market. And how much, of course, can these properties sell for? Now, when we look at close to list price ratios, some of the reports, like the Denver Market Trends report, I don't love that it has only closed to current list price ratio because that doesn't reflect the actual price drops the sellers had to do to get an offer. For September, attached homes saw 95.8% of the original asking price. So 96%, maybe a 4% price difference. Is that a deal, right? That's what a buyer has to ask themselves. Is 4% off the original price a deal? For detached properties, so, homes with land, single family homes, we're closer to 96.5%, so just a little bit higher for those properties. For price trends, it's really hard to tell if we are seeing typical seasonal slowing. And I want to share that graph here for just a second, because I think it's really important to understand that when we look at this data, we are not, there we go. Hold on just a sec. Let me go to that one. Okay. So here are our closed average prices. So you can kind of see the fluctuations, right? We have seasonal slowing that regularly happens in our market. Prices start to rise throughout the spring and they start to pull back in the summer months. Now, you can see some very significant times when we saw price drops, when interest rates started to go up, prices started to fall. And we've seen that in each year since interest rates went up. So the question becomes, what exactly is a real estate discount? Is buying right now a deal? If you can get your property for anywhere from, 5 to 8% under the peak of this year, does that count as a real estate deal to you? And I think that's a question that all buyers have to ask themselves. Now, as a seller, it's a little bit hard to swallow, right? And that's the conversation that I'm having. I have 6 sellers right now I'm having these conversations with. How much is appropriate? Where do we start on our price? And how much is appropriate to drop on the price so that we're maintaining that cash in your pocket at closing, but still getting you an offer? Those are some really hard conversations to have. And I have a lot of stats to back it up for each specific neighborhood, for each specific community. But I digress. We'll go back to this. I want to show you real quick. This is the Denver Metro CoreLogic Case-Shiller Price Index, and this is on Fred. And the reason I show it to you is not to be like, oh, hey, look how much prices have risen for the last 50 years, but also you can see that here. But what I also want to show you is how it shows that prices peaked kind of here, April, May-ish of 2022, just like that last graph I was showing you. And we had a huge drop in prices, and now we're kind of flat right now. Is that the discount? I think it is. Is it going to keep going down? It's possible, right? But if you just put like a straight line on this trajectory, this would be kind of where we would be anyway. And the other thing that I think is interesting to look at is even in the Great Recession, when we were kind of peaked back here in like 2009, 2008-ish, prices didn't drop by that much. I mean, peak to trough, they went down about 8% for Denver. And nationally, they were much more significant, closer to 20, 25%. So that's the question as a buyer that you have to ask yourself. Instead of walking into the situation and saying to yourself, how can I get a deal? I don't want to overpay, right? Which I think that's fair. I don't think you should have to overpay for a property. But also, what is that discount for you? You know, how much do you value this home, this location? And are you comfortable with the payment, even with the interest rate where it is? Can you use some of the seller concessions to help you buy down the interest rate and make it so that you're not house poor, right? So you buy a home in a place that you love, and then you get to enjoy life also. You get to buy that bike, take those vacations. A couple more notes I want to have here for you. Um, and this is interesting being live and having no edits. I'm not used to this, but I will get there. This is called practice makes perfect, right? Okay, a couple more interesting parts. Okay, let's talk about seller concessions because I think that shows a real important fact about what's happening in the market. And by the way, I would love for you to ask me. I have a really great spreadsheet that's very simple to use, and it shows how, as a seller, it's actually better for you to offer seller concessions than it is to just drop the price. And as a buyer, it actually benefits you more too because your monthly payment is much lower than if you just ask for way less on the price drop. So this concessions, seller concessions number, which basically, if you don't know, that's a credit that the seller gives to the buyer at closing, and they can use it towards prepaids, closing costs, and interest rate buy downs. So for September data, we have 59% of transactions had seller concessions reported, and the average was $8,000. But many, especially at higher price points, are showing from $15,000 to $20,000. I mean, I personally this year have seen many transactions with $20,000, $25,000 seller concessions, and we use it to buy down the interest rate and help decrease the cash to close, which has a really big impact on a buyer. And that's what you need to do as a seller is really make your home look the best you possibly can. Staging, cleaning, pre-inspection, and also help the buyer buy down the interest rate so that it's appealing to them in multiple ways. So the question now is, what is actually how is this impacting you right now, right? I think that when you are thinking about making a move, it should really depend on your personal situation and less on the market dynamics and what's happening in the market. Be careful about watching the headlines. Be careful about trying to time the market to get a great deal or to sell at the top of the market. You know, as your real estate agent, I'm going to coach you on those things anyway. But ultimately, what I want for you is to have a very smooth transaction. I want you to gather your information from a variety of sources, myself, but also other places as well. I want you to question the headlines, right? Because headlines are literally there to hook you, right? What was my hook today? Is it a buyer's or seller's market? I mean, that's a good hook, but it's also a really great question. I also think it's really important for you to have reasonable expectations in what you're looking at, whether you're selling or buying when you go into this. Have a real estate agent that keeps you informed on market trends can be a strong advocate for you because what is a deal, right? What is a real estate deal? That's the question I want to leave you with. And as a seller, how can you strategically price and prepare your listing so that you actually maximize your profit? I'm Heather O'Leary. I'm with eXp. Hopefully, you have a wonderful day.